He not awake yet. But he gonna be awake after this.
Oh, I'm definitely ready to sleep.
Ladies and gentlemen, brothers and sisters,
This is a journey into sound.
The fattest, funkiest tunes in town.
Damn, son, where'd you find this?
All right. Good morning. Greetings. My name is Elaine Adams, aka Stock Mom, and it is my pleasure to welcome you all to the Stockhouse U Premarket Show. This is a show designed to help you prepare for the market on a daily basis. We do top-down analysis. We talk about futures, indices, ETFs, individual stocks. We talk about the nudes. We talk about our trades, both good and bad. I think today will be a day where we talk about our bad trades. And we talk about trading psychology. Now, here's something important. We don't give out financial advice. I'm not going to tell you what stocks to pick. But what we can do is explain to you why we take the trades that we do. I'm joined by some of my favorite people, and if you feel inspired, you can hop up on stage as well. The stage is open to everybody at every skill level. Vanessa, Christopher, Liv, good morning, y'all. Normally, we like to start our days off with a quote, so I'm going to do the quote, and then I'm going to invite all of my co-hosts to introduce themselves and do a quote as well. Today's quote comes from a Bloomberg article I was reading. And the name of the article is, If Dr. Seuss Covered the Fed, Here's What He Might Be Writing. Okay. For the FOMC voted no on rate hikes. It kept buying bonds, as the bond market likes. But some of the members took kind of a pot shot by writing down hikes in the SEP dot plot. Ignore all their dots, they mean nothing at all, said Horton to listeners in on the call. Then Horton, the Fed chair, defended his stance to journalists sitting at home in sweatpants. He wrangled with Smalek and Bosler and Robb and said, rates won't rise till we finish the job. For fully an hour he promised to brood, that egg of inflation, till now subdued. I meant what I said, and I said what I meant. We must make inflation at least 2%. You guys, I'm dying over here.
I'm sure you are.
Like, you know, I think we were all extremely excited to hear what Jerome Powell was going to say. And at least for me, I actually enjoyed that. But here we go. Looking at the bond yields today, I'm not sure that anybody else did. We had a great rally yesterday, and I'll be excited to talk about the futures today. But I think that Fed chair and FOMC meeting was indeed extremely indicative of the time that we're about to be headed into. So, Vanessa, good morning. Do you have a quote for us today? Okay. Christopher, do you have a quote for us today?
I do. By the way, Sino fam, I called that out last night on our call about the NFT stocks, and we are up 45% this morning. Good morning to y'all. We're going where the money resides. That's my first quote by Durelli Real. My second quote is going to be, you were born to win, but to be a winner, you must plan to win, prepare to win, and expect to win. Let's do it.
I love that. Liv, Good morning. Do you have a quote for us?
Yeah, I do. Um, I don't suffer from insanity. I enjoy every minute of it. I'm saying that just because I am projecting SPY to retrace back to where we were 2 weeks ago, if not a lot lower than that. Seeing how the message that was presented yesterday by the FOMC and how little effect it had, um, I'm just getting ready. I've been starting to liquidate my positions. So,
Elaine, did you call on me? Because my phone because I have a quote.
Yeah, I called on you first.
Oh, sorry. I was switching from my AirPods, but anyways. I remind myself every morning, nothing I say this day will teach me anything. So if I'm going to learn, I must do it by listening. Larry King.
What's your take on that?
That we don't know everything and that we have to be willing to learn by listening. And if we're doing all the talking, um, you're maybe not taking stuff in. And also outside of that, just paying attention to people's body language and stuff like that. But I guess on Clubhouse, all we can do is listen. But in your real lives, just read the room. That's it. My name's Vanessa and I'm done talking.
Welcome to the stage, L. Marcus Gargovin, Joshua. I hope I said your name right, bro. Uh, any of y'all have a quote for us today, or are you just up here to hang out for now?
I guess I will probably just say cash is a position, so don't get overexcited by what you saw yesterday. I think we may see some continued volatility, but yeah, don't stress out, and yeah, just cash is a position basically.
I've got one.
Brilliant, L. Good morning, Marcus.
Good
Go for
morning,
it.
everyone. Good to see your voices. The stock market is filled with individuals who know the price of everything, but the value of nothing.
I don't even have, I need the more you know sound effect for that one. That's fire. Yeah, absolutely. I think what I've been learning as I come on to stages with people that are significantly more advanced at fundamental analysis than I am, is that trying to understand true market value based on revenue, based on EBITDA, is a big deal. And if you don't know that, how are you going to know what price you're going for? Technical trading is great, but the crux between technicals and fundamentals, I think, is really where the money resides. So, great quote. Well, if anybody else doesn't have anything, we'll move on because I am excited to talk about these damn futures, you guys. $10 years up, 5 years up. So I read something that said that yesterday the 10-year spiked to 1.8 somewhere in the middle of the night, and I have it at 1.74. Anyways, we closed at 1.6. It's sitting at 1.7 right now. This is a 5% increase. That's a fairly steep increase. We gapped up over the night. That's not what you want to see. And we're seeing our NASDAQ, we're seeing the entire stock market sort of react accordingly. It's the same thing with the 5-year, which gapped up 11% last night, and is sitting at 0.8 right now. And it closed at 0.7 yesterday. I mean, it's almost a full percentage point. Um, uh, and so that is going to have an effect. I don't actually have the 30-year charts up right now, but if somebody else wants to give me that, I think the 30-year also spiked. We're seeing, spikes on both ends now of the bond yield curve, which is not fantastic. Kind of going over. Yeah, go ahead.
149 right now.
Do you know what the increase was
I
from
think
today?
it's
yeah.
1.3%, 2.49% right now.
Mm-hmm.
Oh, Jesus.
Yeah, it's almost a 3. I was like,
And these are the things that we need to thank you, by the way. And these are the things that we need to watch out for, right? Noticing when these yield curves spike, we're gonna see our Nasdaq is down 1.5% first thing in the morning. I mean, that's not a small amount, to be honest, to be down. Um, so what do I have and what do I see? Well, I've been wanting to see us break over our 50-day moving average for a while now, but I'm seeing that act as a little bit of a resistance level. I'm also almost officially ready to say that we're trading inside of a range. And we've been rejected from this 13,300 level one, two times in the past since February, and then once again in the beginning of January, or in the middle of January, we got rejected from this level. After trying to break out, we failed to break out, got rejected right down beneath it again. And the range that I'm seeing is 13,300, and the bottom side of it is 12,800. And we're kind of trading in between this right now. Now, this is something that I kind of have been alluding to, which is what if, a lot of people want to see things go to the moon. A lot of people want to see things just crash to the ground. But I don't think a lot of people are ready for if we just we just trade sideways for the next 6 to 8 months. And I don't know what's going to happen. That's not really my skill set, so I'm not going to try to predict it. But there's the possibility, right? We only have three options for the most part: up, down, or to the right. And right now, we're kind of just trading in a range. We've had some great days. We've had some good momentum. We've had some days we took big dips. But we're trading in this range, and I guess there's something to be said about that too, right? Patterns don't have to repeat themselves, but they tend to. And I don't know what it's going to take for us to get out of this range. Maybe some higher Fed involvement. Maybe it's going to take another Biden stimulus plan. Maybe it's going to take some good or bad news on the tax side of things. But yeah, we're having a lot of trouble right now finding our place inside of this market, and that's in the Nasdaq. And this has been historically for the past few months felt most in our large cap tech stocks, right? Why is Apple where it's at when we've had nothing but good news? What's going on with Microsoft? What's going on here? And the answer is a lot of that has come when we see our bond yields go up. Large cap growth has been the place that we're taking that value from. We're seeing the fear in the market. Moving on over to the Russell. I guess I could say a similar thing, right? I've been talking about the range we've been trading in the Russell for a while now, that 2,200 to 2,300 range, and we have had the potential to break out. So we got above that 2,300 level, and we've sort of been sitting right on top of it. Yesterday we closed at 23.34. Today we're opening at 23.13, almost a percentage point down. We haven't broken this new support, but we're really not doing anything other than sitting directly on top of it. So I don't know if I want to call this a high base or, I mean, I guess it counts as a high base, but we're really kind of sitting on the bottom side of this upward trajectory. So if we break below this 2,300 level, I'm looking straight down to the 2,200, which is the range we've been trading in since January. And at this point, almost expecting it because we're not seeing the volume spike. I'm not seeing the buying and the exuberance in the market to continue to push this thing up to, past all-time highs. And that's where we're at. And that's why trading at all-time highs is difficult, because there's really only two options. I need to see this continue. I need to see a strong trend in momentum, or otherwise we're going to go back to the ranges that we've been continuously trading in. Looking at our S&P 500 futures, once again, it's a fairly similar story. So I have this range that I've been looking at between 3,900 and 3,800, I guess. And we broke out on that, right? We were sitting at all-time highs just a day ago. And now here we are. Let's see here. Sorry, we closed yesterday at 39.63. Today we opened at 39.37, and it's just a small, it's 0.6% down. But what does that mean when we're sitting at all-time highs? We really needed to push forward and show some momentum while we're trying to break this and continue to push the chart up. And the fact that we're not leads me to look a little bit more towards the downside and feel as though this is a failed breakout. And that's not atypical for what we've been seeing happen this year and the trend in the market in general. I just think we're going to need a little bit more of a catalyst to continue to push our prices farther up. Is anybody else looking at futures with me?
I am, and everything looks really bad. It looks like people are kind of ducking and hedging with metals. I'm going to be looking into X today if I'm going to be entering a trade. That's the only thing that has, X and, platinum. It's the only thing that has like some clear, concise movement right now. So that's the only thing I'm really feeling comfortable with. Other than that,
Christopher, do you have a take on the futures, not a watch list?
no, that is the futures. That's what I'm looking at: silver futures and platinum futures, and that's what I'm saying. That's what I'm looking to run to at this point. But yeah,
All right, I hear you.
For me, I'm just looking at SPY, and I'm I'm a little bit disappointed after yesterday's speech. I would like to see simply it stay over 393, and if it doesn't, then I'm not really convinced that we're not downwards. And that's pretty much it for me.
Hmm.
I
I
think
hear that.
I read an interesting article this morning. It's actually an old article that Zero Hedge on Twitter posted last week or 2 weeks ago, and it was saying that 1.75% on the 10-year yield is actually a tipping point. And the reason is because that's where the crossover happens between the S&P 500 dividend. So we may potentially see a bit of aggressive selling before we see a recovery again. I'm not sure, but it was just an interesting article that I read, and that's potentially what may cause the next wave of selling.
I'm into that. If you can post that article, L, on, I don't know, whatever social media, or if you're in our Discord, I'd love to take a look at it as well.
Sure, yeah.
yeah. If you post it, I'll get it to the Discord.
Yeah. Kind of moving over to the crude oil section. I guess I also am not enjoying this. And don't get me wrong, crude oil isn't supposed to keep going up. Like I've kind of said this a number of times, but it's very important that we understand it's cyclical, right? And that cycle is based on the supply and demand of our oil producers, drillers, and refineries continuing to either continue to drill and pull more oil, and alternatively the demand of the industries that use it the most, which would involve our XLI, all of our industrial stocks. Really, to be honest, our travel stocks are going to be the big deal there. And we don't want to see oil prices go to the moon. So I'm not necessarily against that, but this 63.75 level is sort of the support that I'm starting to see, and we're definitely trending sideways, doing a little bit of a low base here, where we're consolidating on the low side of the 63s as opposed to the high side of the 65s, and I'm into that. Honestly, the news I keep seeing about oil and oil producers, I would like it to trade sideways. I would like to find a range, and that way we can start to look for the upside again. I think the momentum on this thing is here, but we also have to wait for the demand to rise, right? The price is at where it was pre-COVID already, but the demand is not. And we're not sure whether the demand is going to grow or match to that until 2023. And we've also maybe potentially reached peak oil. So this isn't an industry that I'm looking at for this major growth, right? But at the same time, right now, there's so many things that run off of it. It's impossible to ignore, and there is an opportunity there. So I'm waiting to see the next opportunity. And just because crude oil futures are kind of trading sideways, that does not mean that the energy stocks will. But it definitely does give us some insight as to what we're looking at in their profitability range. Anybody else looking at futures with us? Hey, AR. You're usually a volatility person.
Yeah, yeah. I'm keeping an eye right now on the VXX, and uh, of course that being the inverse of SPY. This overnight it's held the 1265 level, and currently it's at 1282. I do have a setup here, looking at some of my other momentum indicators, that this has a chance to the retest yesterday's highs, right?
Mm-hmm.
Yeah, so we're talking at minimum right now around like that 1275, 1280 area. So yeah, it wouldn't surprise me maybe sometime today. We do see that pop. Um, you know, just from there, it's just going to be real interesting to see if we're going to see a continuation, right? Um, if you look inversely with the SPY now, we've just been in that channel, right? Basically between the high of 398.23 and and three 394 and then 391. So hopefully we can hold the line at 391, and this again just ends up just being more choppy activity. Um, I just hope there isn't any news that's going to really give this pullback any fangs. So that's my take.
Yeah, absolutely. I mean, I think all of our whatever chart you're looking at, and whatever your indicator is to try to see the emotions of the market right now, there's definitely a lot of emotion. There seems to be a lot of hesitancy, and we definitely don't seem to be too exuberant to continue to push and buy, especially as the yield rates go up. So with that said, I want to move on to our next segment. It's every other day, so I guess it's time for this.
All right, guys. So you know how this part of the day goes. It is time for trash trades. If maybe you jumped into something a little too early or maybe a little too late, and it just didn't go the way that you wanted it to go, now's the time to raise your hands, jump up on stage. Let's talk about it. Um, Alec, you don't get to go first because I'm gonna take the thunder from you with this one. Um, so I did stick to my trading plan with KMPH, and it did go up to like 11, 12 range. The issue is, of course, we were all swinging it up in that bull momentum swing yesterday, and then of course it had an extreme pullback. My plan, to everybody that was holding with me, and I told everybody, I scaled out to my original position in the 1260 range, and the next day it kind of fell off, but I did hold 100 shares, and I just should have sold it all. And I don't know. I guess maybe I need to change my trading style a little bit from holding a principal position in my swings just to see where they go and just take my profits. Yeah, so that was my trash trade.
I mean, just to double down on what Chris said, I was not only in KMPH on shares, but on options, and it spiked up to about 14. And I said to myself, oh, I think this is a $20 stock. I'm going to hold on to my options. And yeah, like Chris said, it had a major pullback. So I did not listen to myself. Again, the option was up like 80%. Why I thought it could go farther or why I wasn't happy with those profits, that's my own problem.
I think the worst thing about being in the stock market and being somebody who's motivated by money is that we're motivated by money, and greed is number one on a lot of our, biggest faults list. So I understand you guys. I'm greedy as well. That's why you got to force yourself to take profits while things are green, and and I feel you. Anybody else? Those are some rough trades for sure.
So I have one. Um, I bought WWR calls last week, and I totally forgot about them because I bought them in my Webull account, which I don't pay attention to. And then I got a notification this morning that like it's about to expire, and I don't know. I think I could have made some money yesterday if I was paying attention. So yeah.
My bad. I missed the sound cue. Marcus, you just flicked your mic. Do you have something to add to that? Are you in WWR calls too?
I had a trash trade. Mine was totally different
Go ahead. Don't hold back now.
though. I I had I think I texted you the other day. Said I'm starting to scalp, and so I had this scalp play, Verde Bio Holdings. It was just what like out of nowhere. So I actually entered the trade, but in all honesty, I had to go take care of some business on my real estate side. By the time I came back, well, when I left, I was up 80%. By the time I came back, I was down 20%. So I'm like, you know what? Learned a lesson about scalping. Never leave your food unattended.
Absolutely. That's a big one. I mean, I hope you just take that forever. It's okay, Marcus. I have come on this stage multiple times and talked about trading while not paying attention and how I've made losses. Like you're not alone, but and then the other side is then you'll cut stuff because you know you're not going to pay attention and you'll
Right.
watch it run because trading is a full-time job. It's not a joke, and if you're doing other things, you're just going to miss out on money, and that has to be okay. It has to be okay. That's the day trader lifestyle. It has to be okay for you not to take maximum profit on everything, which is an interesting, dichotomy for the fact that, once again, we're all greedy, and I don't ever want to not. I don't really like leaving money on the table, but it's part of the game. Anybody else? All right, I'm gonna try a new refresh here. Let's see if I can pull it off.
Good morning, everyone, and welcome to the first place every morning you should stop to get your stock market news. That's right, I'm talking about the morning show presented by Stockhouse University. We are not financial advisors, and this is not financial advice. This is a conversation amongst friends that love talking about stocks and want to improve our profitability by coming here every day, talking about the market, relevant news, and how we're going to use that information to be profitable. We think education should be accessible and affordable to everyone, so we have a free Discord that has tons of resources and over 1,800 amazing members at all different skill levels that are also talking about the market, and they're trying to grow as well. We also do free classes on Sundays, and we would love it if you would join that community and contribute, because together we are so much more powerful than we are individually. Invite your friends, invite your family. Let's all create opportunities for generational wealth.
Yeah, I don't know if I like that one. I'm still working on it, you guys. Anyways, you know what time it really is time for.
S&P, the NASDAQ, the Dow Jones, where all the old money stashed at. Bet you ain't no Square on Cash App. Stock, name an asset that could match that.
All right, so here's the thing here, and I just want to share this because there's a reason why I kind of call it top-down analysis and why I do it a certain way. And everybody on stage is welcome to do it their own way. But I think it is really important to start with the futures, not SPY, not the Qs, but actually look at your /ES. And why is that? Well, because futures trade they trade 24 hours. And we have SPY, we have these other things that don't. So you're able to get a little bit more market sentiment by looking at what the features are and then kind of making your way down through the major indices or ETFs that represent those. And so, real quick, I just want to come back and talk SPY because I'm with you guys. I feel you. I do not like seeing SPY close at 397, and here we sit at 394. We are back inside of the 391 to 394 range that I have wanted to see us break out of. And once again, we're basically at the top side of that. Now, the real question is, are we going to continue to downtrend, or are we going to see a little bit of a pop up? And I don't know. I mean, currently looking at the amount of pullback we took coming into today, that doesn't make me excited. Currently looking at where we are in terms of the 5-year and 10-year, I don't know that I'm necessarily excited. But once again, I mean, this is why I talk about activation levels as opposed to just saying, I don't like it. It's going down for sure, right? If we break below 391, I will be looking for 387. If we break below 387 and 385, I'll be looking for 378 because these are the levels that we've hit, and that's how you trade like support and resistance, right? If we go over 394 or at least hold here, I'll be looking for the 396. We've hit 397. That was our high yesterday. I'm excited to see if we can hit that again, but I kind of do it straight by levels and price targets, and it's how I keep myself from being an emotional trader. You know, once you're activated, that's kind of how you move. And it's the same thing with the Qs. So coming on over to the Qs, sorry, QQQ, which is the ETF representing the NASDAQ, we closed yesterday at 321. And here we sit at 316. So for me on the Qs, I had 317 is the level I want to see us hold above. I have a little bit of a supply zone kind of drawn there, or a resistance that turned into a support, and I really wanted to see us hold that. Now the bottom range of that for me, because it is a range, is 316.49. And below that, I'm kind of going to be looking for us to retest that 311 level, right? And that's where we were at on the 10th, a week ago. So it is crazy. I know yesterday we were talking and it's like, these are levels that we haven't seen since a week ago. So it won't be surprising if we retest that again. I mean, going below that, you know, the low that we've hit was 299, 297, 16, which happened 2 weeks ago. A whole 2 weeks ago, we were sitting at 297, right? So once again, And also another interesting aspect, I don't know whichever technical indicator that you use to sort of read charts, but if you look at the interaction between the 50-day moving average and our cues, you'll see once again kind of a correlation where we're not breaking over this 50-day moving average right now. It's really kind of forming a little bit of a resistance for us. And that's sort of an important indicator. Is it the 50? Sometimes it's the 100, right? Some stocks love bouncing off the 100-day moving average. And we also did see that over here in our cues. Some stocks will go all the way to the 200. And every time we break below one of these longer range moving averages or hold against it, or this is our sticking point, that tells me something different about a stock. Specifically, I'll just go to the extreme cases. When I see stocks break under their 200-day moving average, that's very significant for me and a lot of people. We look at that and say, wow, this thing is trading at a lower level than it has been trading for almost a year. Um, so I'm not going to go fully bearish until we start making a little bit more of a bearish retracement, but we definitely are once again in yet another ETF looking that we're starting to form a range here. And so once again, when I see a range, I'm just going to look for my activation levels. If we break out of the resistance of that range, I'll be looking to the upside. As we approach resistances of ranges, I expect to be rejected unless we see a volume spike. And it's the same thing with supports, right? I expect to bounce off of them unless we see a volume spike on the downside. And that is why I also definitely advise everybody to, find some way to see the difference between buyers and sellers in the market, right? You want to be able to gauge um, that emotion, and whether or not those volume spikes are buyers and sellers is kind of an important thing as well. Anybody else looking at SPY or the cues with me?
Yeah, just
You,
my bad, AR. Yeah, just noticing that it's down as of right now. Of course, we're down about 20 something, 20 some odd points. So I was looking to get the opportunity to maybe jump in as it floats up. I definitely definitely think that it would hit that resistance and show um, a little gap down. But there's still some, you know, sentiment in the market that people are going to spend money. So I just think it's going to fluctuate until we get a chance later on this month to just see a downtrend. Later, I think it's going to occur later on this month. Don't ask me why; it's just intuition, but that's just me.
Yeah. So what levels are you looking for, Rev?
So for the SPY, I'm looking to retrace probably the later February. I think it was like uh, maybe 3866 from what I saw. Not 3866, excuse me. Um, I'm just getting to my computer, but like the early to late February like 20th maybe. It was around, I want to say high 388. Uh,
Yeah,
so
on
like
the 20th.
3886, something like that.
No, we're sitting
What's
at 380 on February 26th, and then we came
okay?
down to the low, well, at least in the past range of that on March 3rd, which was 371.
Okay. Yeah, looking at that 380 range to come back to retest right before we hit new highs again in April. And yeah, that's just my take.
Oh, interesting. So the retracement style, I like it. Anybody else looking at SPY?
yeah. So yeah, I'll be brief. I apologize for the background noise. I, well, you've already pointed out, um, the primary resistance levels, right? That 378, 3, excuse me, 398, 397 level. Um, if you look at yesterday's high,
Mm-hmm.
today would basically suggest that we're that pre-market is around like a double top of sorts.
Yeah.
So if we do open the morning, even trying to revisit that, I wouldn't expect a bounce over that 397. I would expect resistance really to kick in, and we may see some level of scalping, from a volume standpoint. From there, that pullback would then fall back to your 394 level. Again, consolidation hopefully will be there. 394 has been a level that at least over the past 5 or 6 days, it's it's been a decent pivot for us. So I wouldn't expect it just to slice right on through. Um, but if it doesn't hold 394, then we begin to, retest that 391 level. I think you mentioned what, like 387,
Mm-hmm.
389, right?
Mm-hmm.
So I could see all of that momentum, happening there. An indicator I use, it's called a linear regression line, and literally it's just a straight line, that I tend to use for just just to fundamentally understand, if something is overvalued or undervalued. So I do have the last 5 or 6 days with us being in, let's say, that overvalued range, and before we do, let's say, take that next bounce up, yeah, I could see price retesting that again, that 388, 389 level. That's where I have the regression line right now, and hopefully, again, we hold the line. But news, and all those other factors out there, right?
All right.
Um, you know,
No, I hear you, and I absolutely agree. I want to run through the other sector ETFs real quick because I missed that yesterday, and I think that's really valuable. So here we go. XLI, our industrial ETF, kind of trading sideways. We closed yesterday at 97.3. We're sitting right now at 97.39. I think this involves the cyclical style of trading and sort of also hints at the reopen trades. And so I don't know that we're going to see those entirely pull back, right? This is sort of the rotation that we've been seeing. And I think reopen trades are still a thing. But when the whole market is pulling back, I'm not looking for the upside. I will be looking for the down. But either way, we'll go both ways on this. XLE closed yesterday at 51.85, sitting now at 51.47. So we're seeing a little bit of rejection from an all-time high and coming down. We're going to retest right now our 20-day moving average, and we'll see how we stand above that. Once again, we looked at the crude oil future prices, and we can talk about some of these energy companies and what they've been doing. We've been seeing amazing revenue, but also we're looking for the future outlook, and I think that's important. XLK, our tech sector ETF, once again, so yesterday's candle on a daily chart was a doji, and I think that that really does talk about the indecision. We've been wanting to see our tech sector continue to gain momentum and struggle with that. And I love a doji, right? What happened before it? Well, we had 3 green days, so it's not as though we don't have some level of momentum, but I think people are waiting on a certain piece of news to give them the green light. So we closed yesterday at 133.70. We're opening at 132, flat right now, and it's just a little bit of a pullback on that side. And this is to be expected. Tech and consumer discretionary are the two sectors I expect more than any others to be pulling back if we see spikes in the 10-year and 5-year bond yield. And here, let's go. Looking at consumer discretionary, XLY. We closed yesterday at 169.61. We're opening at 167.97. So once again, a very similar story here. And we had a nice large candle that broke off the bot. I mean, we opened at our 50-day moving average and pushed up above that. And right now, we are still above it. So this could be an interesting story here to tell. And on top of that, consumer discretionary is a part of our reopening trades, right? So many of the things I'm looking at, Las Vegas Sands, MGM, whatever, those could fall under consumer discretionary for sure. Yum brands, that's where it is, right? Even some of the EV plays and green plays that we're looking for. So all of that counts under consumer discretionary. If we look at our real estate sector, we closed at 39.41. We're sitting at 39.36. A bit of a doji as well yesterday. And this is a sector that actually has a lot of hidden potential, specifically for reopening trades, but also as people are moving around the country. I'm not going to get too deep into it, but I think there's a lot of value to be had here. Coming over to XLP, which is our consumer staples index, it's sort of a similar story. So we closed yesterday at 66.42, and we sit at 66.41, right? So not much of a change here, and consumer staples shouldn't have changed much. there's a reason. These are defensive stocks. I don't expect there to be much change, and we have seen a fairly large run up starting in the beginning of March. We came from 63 up to 66, which is a decent move for consumer staples. XLC, which had a tough day yesterday, which would be our communications sector ETF, closed at 76.02, sitting at 75.12. So a little bit of a pullback on that as well. And we've seen like a lot of our favorite, social media stocks kind of struggling. Facebook, why is Facebook struggling right now? But it is. And it's the same thing. I mean, it might be one of the more undervalued stocks in the stock market at this point. And we can talk about our telecommunication companies as well, Verizon, T. I think we have some decent news from Nokia, although I don't know if I'm going to count that as XLC. XLB, which is our materials ETF, has been sitting on a little bit of a support, has been trying to form support, and I'm into this. We've seen materials be a place of value, and be a place in the stock market where we expect A, growth because of the connection to our renewable energy, and B, there's value because these are stocks that haven't really moved a crazy amount. And so here we go. We closed yesterday at 78.83. We're sitting at 78.55, a slight pullback on the day. But at the same time, I have 77 basically all the way down to, from 77.55 down to 77 flat as a little bit of a demand zone right now. And I'm wanting to see that demand zone respected as we continue to look sort of upwards on the materials sector. Last but not least, I'll talk about XLF, the financial sector, which has been just ripping. I mean, I don't know. Whenever I see bond yields turn up, I immediately start looking at JP Morgan. I look at Goldman Sachs because these stocks do well when we see those bond yields spike. And it is important sort of to find your inverse correlation plays so that you can get some value when these things happen. And it's not in tech, right? So we closed yesterday at 34.44. We're sitting at 34.80, and I'll be looking at JPM if we continue to see the 10-year and the 5-year spike today, which they are continuing to trend up even as we're talking. So with that said, let's kind of keep it moving. I don't want to stay here too long. I want to talk about the news. Does anybody have news that they think is important for the opening today?
The tax deadline has been pushed back to May 17th instead of April 15th.
How do we trade on that? How do you think that the market's going to react to that?
Ooh, great point. So I'll push back the opportunity for the market to, when you pay out maybe refunds or when people have a tax obligation, when that whole just trend happens, right? We're not sure if people are going to put that money back into the economy. There's a whole lot of indecision, right? Whenever the market sees indecision or anything shaky, I don't think it takes that well. So we may be able to capitalize on, the new fiscal year, not new fiscal year, but new quarter starting, new balance sheets reset for the quarter, maybe able to grab some good plays since companies maybe try to rebalance your balance sheets or play off of just anything happening from the quarter before. So just take a look at the quarter before, see how the trajectory of the company, see how they've bounced back since COVID. Are they still on that upward trajectory, or has the wind kind of come out of their sails? So we'll be able to see after that first quarter going into that second quarter, how they perform.
Yeah, interesting. So we had the jobless claims come in today, and people expected it to be, I think, 700,000 was the word on the street, and we came and it's at 770,000. So that's actually an increase,
Yeah.
and the market doesn't like that at all. Other things going on. Obviously, rising treasury yields. We're expecting some central banks as well to start talking about monetary policy, specifically in the UK. We're looking at Turkey, Bank of Japan as well. So we'll be watching, like the Nikkei has been an index that I also kind of watch and look at to see how they're reacting to a lot of our news. let's see, what else do I have? Lordstown Motor, the CEO went on CNBC yesterday and basically after the Hindenburg report saying that they didn't have pre-orders, and then he goes on CNBC and he's like, "We don't have a product. We definitely don't have we don't have orders. Like that's not real." So that came down 10%, and also the SEC is going to hit them up for more investigation. Laser, everybody's favorite um sorry, God, it's what do they do? Oh, lidar. There we go. Laser, everybody's favorite lidar company, as well. Just got another partnership expected with the SAIC's R brand program, to go in production with another, I don't know, company. And sorry, they do vehicles. So once again, laser and this lidar thing. I've always wondered whether it was going to be lidar or 3D scanning that was going to be the primary technology, for these autonomous vehicles, and Laser has been like kind of one of the bigger companies that people are talking about. Um, Other than that, Nokia signed a 5-year deal with AT&T, to deploy the mobile operator C-band network in parts of the U.S. So people are talking about Nokia. I know some of you trade that on stage. What else? Oh, Jumia, my favorite little baby Jumia, is doing an offering. So I don't know what level it's at, but I know they're down in the pre-market for sure. If anybody knows the level of the offering that they're doing, I'd love to hear that. Let's see, what else do I got? Oh, Apple. Apple might be launching new iPad Pro models in April. We really haven't seen much movement from Apple. I mean, yeah, we did bounce out of the teens again, which is beautiful. That doesn't change anything about my EOY 150 target. So I'm really waiting to see when we're going to catch some momentum on all of the ridiculous good news that we've been hearing from Apple, and their product lineup. I think that the iPad kind of is a great place for them to catch on the consumer side. Sorry, and on the non-professional, if I don't know that there's a reason to buy an $8,000 laptop or a $5,000 laptop at this point when an iPad does literally everything. It has a longer battery charge, so I kind of expect sales in that to continue to grow. On top of that, they're working with TSM. Let's see, hold on. Yep, TSM is going to be doing the silicon for that, so it won't be M1 chips or anything. That's an interesting note as well. And they're still going to be having a Thunderbolt connector, so lame. Anybody else got any news?
Sorry, I was looking into the Jumia offering.
Uh,
So the one thing that I did read. Oh, go ahead, Greg Gavin. You can
oh
go.
yeah, for Jumia, it's 8.9 million ADS and $48 a share. So around 430 million.
Yeah, thank you for that. And so I think we were at $50 yesterday is kind of where I saw the price last. So yeah, now I'm expecting it to kind of sink down at least to that 48 level, if not a little bit lower. I know people kind of like to sell off when we see these offerings happening. Go ahead, Chris. What else is your news? Let's get to it. It's almost watch
Um,
list time.
I mean, so I had a couple of things, and we did say we were gonna start doing some NFT space things as well. So, one, we had the Nokia 5G deal with AT&T, so really bullish on that. Also, Top Shot today at 12 PST, and I'll just leave it there.
Yes, sir.
Do you guys have any other stock news?
All the NFT stocks are up.
Oh my God, you guys, what about OCGN?
Yeah, it's all running,
Yeah,
Running.
yeah. I'm actually looking at the.
running.
I'm
I
looking
dropped the
at.
list in the NFT chat yesterday. That I don't. It's crazy.
Okay, so Ocugen,
Wait. Quick question. Do these stocks run every time they drop something? Is that the correlation or?
No, not really.
No, not in particular, but it's something interesting that I want to look into too. That is a very good idea.
Yeah, I'm actually looking at the ETF. It's ETHE, which is the Grayscale Ethereum,
mhm.
and right now it's flat, and it has been consolidating, but the volume is very interesting. So it could be rounding up and accumulating to eventually make a run sometime later this year. That's my assumption.
Yeah, I mean TKAT did like what 240% yesterday. It's up like 40% today.
Wow. Okay, we can go back. I'm sorry, Elaine.
No, it's cool. I mean, on the other side of news, I mean, at least we can trade that. Bitcoin's also up today. So I think we closed yesterday at 57,000. We're at 58,000 right now, 58,100. I don't know. Are you guys interested? Are you excited underneath 60,000 at this point? But at least any spike is going to give us, I mean, Mara and Riot were printing money, yesterday in the afternoon. So there's always that kind of correlation, which is an easy one. Also, just OCGN, they just got, they're working with US regulators to have an emergency authorization for their COVID vaccine, Covaxin, developed by some Indian partner, Bharat Biotech. They're down in pre-market, but we all know that getting authorization from the government for a 80% efficacy vaccine is not a bad idea, and there's potential to trade off of that as well. So, with that said, if nobody else has any news, we'll get into a quick, brief watch list and then get into the day. So, I don't know. Who wants to start it off? I'm not ready. Vanessa, what are you watching today?
To be completely honest, I'm not watching anything. I'm probably going to do some research to find something, but I've been in VC and I'll probably get out of that today and figure out what I'm going to do with that WWR call that I forgot about. And yeah, so I'm not watching anything.
Christopher, what are you looking at today? What's on your watch list?
I'm like I said earlier, I'm watching metals. I'm watching NFTs. I don't have like a specific stock that I'm watching. I'm in SINO. I did exit most of that position at 11. I'm holding on to 20 shares. Like I'm not playing the market right now. It doesn't agree with my thesis. So I'm sitting on my hands and waiting for it to make sense to me.
Okay. I'll go. I talked about, and you guys, like people who actually, whatever, not like that, but people who talk to me, I just have place for different things, right? And so specifically, I always look at the financial stocks when we see our bond yield spike. JP Morgan closed yesterday at 155. They're sitting at 157 right now. And if we can hold this 157 level, if we continue to have this sort of economic environment, I'll be looking for the next leg up. I could easily take a run up to the 158, like 158.60 level. And it's not about big money, but it is about just being able to catch the direction of things that move in correlation. So there are a number of stocks that go up as bond yields spike as well. So that's kind of what I do in that situation. Although I'm not sure that we're going to continue this spike throughout the day. It will be interesting to watch as it goes along. Liv, what are you looking at for the day?
Okay, so for today, I'm looking at specifically loading up on puts for Apple. My entry for Apple would be 120 down, and my exit would be 118. I don't want to really ride these down too much because Jay Powell's meeting will be most likely a pump in the market. Next thing that I'm looking at is Shopify. My entry is looking for for sorry 1,137, and my exit is going to be actually at 1,100 if possible. Fubo, I'm looking at puts. Entry is going to be 29.77, and my exit is going to be 28.40. And then that's it for now.
Love to hear it. Also, Jay Powell spoke yesterday, man. Marcus, what's on your watch list for today?
I was just looking at UVXY actually while you guys were talking here, noticing it's up like 3%. So if that holds true, I would probably 750. And I'm just trying to calculate my exit levels right now. But I was just looking at UVXY.
Interesting. Yeah, we're seeing a good spike in volatility. AR, what's on your watch list for today, man?
Yeah. For me, I'm just just starting to enter into some of these long positions. Yeah, on the only thing on my scope right now is that ETHE, and again, the reason for that is just this whole NFT phenomenon. So there's a lot of activity that's happening there, and Ethereum is basically the is one of the primary backbones from a cryptocurrency standpoint. So it's just a nice way for me to enter into something, and it hasn't left its range yet. So that's all.
Yeah, totally. Gergevin. My bad, bro. How do I say your name? I don't want to get it wrong.
Yeah, it's good, Kevin. Whatever.
Oh, Gergevin.
Yeah.
Okay, cool.
So
What's
right
on your
now,
watch list for today, man?
yeah, TK80. Like my average is 150 for TK80.
Okay. What are you looking at for a price target on this thing?
Damn. I think $30. It's $30 right now, I think, already. Yeah, it's 31 right now. In the last 2 months, it's up over 2,000% already.
What's the ticker?
TK80.
Interesting. I
TCAT.
can't find it.
It's the
It's like
top
an NFT play.
one.
Yeah,
It's
to
the top
convert
NFT play.
TKAT.
Yeah.
Oh, T. Okay, sorry.
Yep. It's
Oh,
in
yeah.
the
Oh.
list that it's in the NFT list that I posted yesterday.
You guys act like I pay attention to other people's watch lists, but I don't.
Well, you asked me to put together the NFT
No.
list,
Oh my God,
and then
Chris,
I dropped it.
stop. No, I'm thankful that you did. I just didn't read it, but I hope everybody else did. Joshua, what's on your watch list for today?
Good morning, everybody.
Good morning.
So I'm watching Cannabis Stocks this morning, specifically Hexo because their earnings came out this morning. HEXO. So I'm keeping an eye on them just to see if they get back below $8, and then I'll buy, because I'm already holding some at 750. So I'll just kind of average in if they get back under 8. But if they keep going, then I'm here for it. I'm also keeping an eye on MJ, the ETF, some cannabis ETF. That I'm in. So I'm
Kind of
hoping
what I
that
was
keeps
gonna.
going.
Yeah, that's kind of what I was going to ask. How do you feel about the entire sector? Because Hexo definitely did go on a run. But how are you feeling about a lot of the other major stocks?
I'm feeling some anxiety. However, I do feel confident that they'll pick back up. Like I got some calls for MJ that don't expire until October. Like I'm feeling pretty confident that it's gonna go up. It's just when is the question. So yeah, a little anxious, but I'm not selling.
No, I'm with you. I mean, I'm holding one long position in a marijuana ETF, but I'm actually not enjoying it. And this is the sort of thing that I tell other people where it's like, yeah, it could go up, but when? And then is your capital best deployed sitting there waiting for, some sort of federal regulation, which Biden is not thinking about that right now. All we're seeing is him worrying about tax in this American Recovery Act, right? Which Mitch McConnell is going to make sure is a problem. I'm ready for somebody to take him out to dinner and butter him up or something like that, because this guy is ridiculous. We're kind of almost out of time, so I hate to skip over people. I'm gonna go with Key. Good morning, Key.
Good morning.
Anything on your watch list for today, Key?
You know what? I am sitting on my hands, and the rest of this week, I'm watching everything. So
okay.
I'm just watching everything, but I'm sitting on my hands. I don't plan on making any trades this week. I'm here for the affirmations, to be honest, today at the end of this.
All right. Alec, in 15 seconds or less, do you have a watch list for today?
Cash. I'm doing the same thing as Key. I'm watching right now. I'm not loving the market's reaction to the bond stuff.
All right, I fully feel that, and I aim to please. So let's get straight into this. As always, I want to start with gratitude and giving thanks. I'm thankful for the stock community and everybody who came to hang out on stage today. I'm thankful for everybody in the audience. I'm thankful for my health. I'm thankful for my account. Because that's the ticket to the show. I will always protect my principal. Cash is a position. Patience is a position. I will not trade based on fear. Every time I enter a trade, it'll be the right time. I will trade to a plan. I will wait for confirmation. The spirit of every successful trader and investor runs through me as I trade. Trading is fun, and I'm happy to be in the market today. I'm grateful for the opportunity to make generational wealth, not only for myself, but for the people that I love. I love all of you. Let's stay safe today. Let's be really targeted about what we do. And let's have a nice green day as usual, regardless of market direction. That said, this is Stockhouse U, and we're out.
Thank you.
See you, everyone.